Welcome back to another video here on Financial Friends. My name is Brendan and I'm going to get into the Dow Jones, S&P 500 and Nasdaq. But first, before that, I want to ask you to go ahead and smash that like button down below. Helps out the YouTube algorithm and lets me know if you like these types of videos. Now, in regard to that, if you want to see more videos just like this one or something a little bit different, comment down below. You want to see more like this? Comment below. You want to see something different? Comment below. Either way, let me know what you think. And without further ado, let's go ahead and kind of demystify and break down what exactly the Dow Jones, S&P 500, and Nasdaq are, why you should care, and why you see them, all over the place whenever you are reading news or looking at CNBC or any type of website, Yahoo Finance, whatever it might be. So first off, we're going to need to break down what is an index, and let me move myself so I'm not blocking everything. There we go. So an index, in terms of my definition, very basic definition, is an indice pools together stocks that give us an idea of what's happening in the markets. That's really what it is. Think of if you're trying to track how your sports team is doing. Well, you might look at win percentage. You might look at wins to losses. Well, in the stock market, we don't really have wins and losses or win percentage. That would more or less be gain or loss on a stock. So how do we quantify that for the whole entire market? Well, we use an index. We pool all of those stocks together to kind of give us an idea of what everything is doing combined. And the Investopedia definition, which I will leave a link to Investopedia down below, fantastic resource, highly recommend it, and I heavily lean on it for videos like this and other ones because it gives me an idea of how to break things down that will help make sense to other people. A lot of times I explain things in my own sort of weird way that makes sense to me and not necessarily what makes sense to everyone, so I like to lean on Investopedia. But anyway, they define it as an index measures the price performance of a basket of securities using a standardized metric and methodology. Now, we will get down to what exactly that standardized metric or methodology is for each individual index. Now, I don't necessarily put too much stock, so to speak, in the way that they are weighted or priced, but I will have it for you. I'm not necessarily going to speak on it too much because I don't completely use it and understand it myself, but let's move forward. All right. How does a company get added to each of these indices? Now, I'm going to break down something with the Nasdaq, but first let's go over the Dow. So the Dow Jones, the criteria to be included, your stock to be included in the Dow Jones is kind of vague. They just say here that the companies are leaders in their industries and are all very large, and that the components and the companies are not added and removed lightly. There's a big review, and normally they'll do more than one company at a time, so they're not going through and adding or changing constantly. And the Dow, and I'll speak more to this later, is basically just the biggest, most impactful companies you can think of. That's kind of how I like to define it. Now we'll hop over to the S&P 500 over here. To be selected, stocks must have a market cap of at least 11.8 billion or more, have a public float of 10%, have positive earnings for the last 4 quarters, and have adequate liquidity as measured by price and volume. Mouthful. Basically, they have to be a good, solid company and a stock that is not a penny stock or a small company or something that could be influenced by, a small number of people. And that's really about it. They need to be a profitable company as well. When Tesla was being looked at to be added to the S&P 500, something that was holding them back initially was their 4 quarters of positive earnings. They didn't have that yet, and so they had to wait to be added. Obviously, a massive company, much bigger than other companies in the S&P 500, but of course, they don't have those earnings. And then the Nasdaq 100. Now, the Nasdaq itself, leave out the 100. The Nasdaq itself is actually, a stock exchange. It is basically like the NYSE, the New York Stock Exchange. It is its own stock exchange. It was the first digital electronic stock exchange. But the Nasdaq 100 is the top 100 companies within that. So we will get to that again. And you can see there at the bottom, while there is no minimum requirement for market capitalization, the index itself is the 100 largest companies on the Nasdaq. And it obviously needs to be on the Nasdaq or listed on the Nasdaq and meet a few other requirements as well. Continuing to push forward here, how are they weighted? Well, the Dow Jones is price weighted. The S&P 500 is weighted based on market value, and the Nasdaq is weighted on this modified capitalization methodology. And then I have underlined within each part kind of what that means. You have the Dow Jones is affected only by changes in stock price. And then you have for the S&P 500 that it kind of attempts to ensure a 10% change in a $20 stock will affect it the same way a 10% change. So it's really based on percentage change for each company. And then you have this modified method that uses individual weights of items or included items according to their market cap. So it's really, market capitalization based. If you'd like to do more research on this, you could definitely go ahead, like I said, use investopedia.com. For me personally, this is not something that I lean on super heavily. It doesn't influence decision making. Really, the next part of it kind of is the most interesting to me. But for the sake of this video, for breaking down all three of these, here are these definitions. Here are kind of how each index is weighted. All right, what is the Dow Jones, S&P, and Nasdaq? What companies are in them? This is really what we're here for. The Dow Jones was founded in 1896 to track 12 companies, but it now tracks 30 of the most blue chip companies or the largest, most impactful companies you can think of. Companies like Nike, Johnson & Johnson, Coke, and Disney. And I'm going to go ahead online and show you all of them. I can't show you all of them for the S&P 500 because there is 500 of them, and it was created in 1957 to track the largest 500 American stocks. You can see here Google, Amazon, Meta, and Apple. And I don't have any other ones. You may ask why. Well, the Nasdaq 100 was created in 1985 to track 100 of the largest companies on the Nasdaq. And I have in parentheses non-financial. They leave out financial companies in the Nasdaq 100, but they're going to include these same stocks. And the Nasdaq generally is more tech focused and tech driven, but I will go online and kind of show you. Again, there's some different names involved in the Nasdaq. It is not completely just those. So let's go ahead and slide over online here. So this is going to be Market Business Insider or Markets Insider, and you can go ahead and check these out. I will leave links to these as well below. But here are the Dow Jones stocks in alphabetical order. Companies like 3M, American Express, Apple, Caterpillar, Coke, Dow itself, IBM, Intel, you get the gist here. It's these big, massive companies. For the most part, you've heard of all of them. Disney, Walgreens, Visa, Verizon, United Health. So big, massive companies, very impactful companies at that. Now the S&P 500 here is going to involve 500 companies. Again, this is alphabetical, starting off with 3M, but just an absolute laundry list of companies. But for the most part, you're also going to be able to recognize a majority of these, even if we just happen to M, let's say, a random letter. Marathon Oil, Marriott, McDonald's, MasterCard, MetLife, Meta, Mondelez, big, food producer, Moderna. So again, these are the 500 largest companies, the most recognizable names in the United States. Now, you're not going to recognize all of them, and I think that's the beauty of investing in the S&P 500 is it gives you this mass diversification that you don't necessarily get in 100 of the largest, tech kind of focused or, companies listed on the Nasdaq essentially. And then you also don't get that with the 30 largest. This is 500. But moving into those 100 companies here, this is the Nasdaq 100 stocks: Activision Blizzard, Adobe, Google, which is Alphabet, Amazon, AMD, Apple. These are all just A names. DocuSign, eBay, Dollar Tree, Honeywell. So you can kind of see where you're getting some of your diversification here. But again, you only have 3 pages because it's only 100 stocks. So let's slide over to page 2 just to go ahead and take a look. Here we go, Keurig Dr. Pepper, Lululemon, Microsoft, Netflix, NXP Semiconductors, Pepsi, PayPal. So again, without me continuing to just list companies off, you kind of get the gist here. Tech companies, but also exposure to other companies as well. Now, touching more on that aspect, we can slide here. Should I invest? Well, it kind of depends. If you're going to be looking at these blue chip, big companies, and you like this high quality, financially sound sort of aspect, you might want to look at companies that are in the Dow Jones or investing in the Dow Jones directly via DIA. So, these are, again, big established companies with good financial history, but they're not necessarily set for massive growth. They're pretty established. Then you have the S&P 500. If you're looking to diversify your holdings, like I mentioned earlier, amongst top 500 companies in the entire United States stock market, this is probably what you're going to be looking for. It really allows you to track the United States as a whole by investing in one thing, and very passively. You can use VOO, you can use a myriad of other options that track the S&P 500. VOO is something that I personally use. It is not investment advice. You don't have to use any of these 3, but these are the 3 that are kind of most popular. Well, SPY is also a very popular option, I feel as if I should mention that, for the S&P 500. Moving into the Nasdaq 100, this will concentrate your positions in the top tech companies, in the United States, while also giving you exposure to consumer services. Words are a little bit difficult today. Healthcare and industrials. So you can do that via QQQ if you were interested. And I hope that you kind of got my little joke here with the chips. You obviously have the blue chip, the 500 chip, and then the semiconductor for those, or the microchip, for those tech companies there. So wrapping all of this up, if you are looking for more information, you can check out my social media at FinFriendsYT. You can shoot me an email if you want, finfriendspod@gmail.com, and also view the website at gemmy.so/financial friends. Check me out on Twitter, Instagram, TikTok, wherever you would like. If you liked this video, go ahead and drop a like below. If you learned something, leave a like as well, and then comment what you learned. I'd be very interested to know. And if you want to see more like this, go ahead and hit the subscribe button. After you do that, hit the bell directly next to it. That way you will be notified every time a new video does come out. And I will see you in the next one.